If you're trying to find answers as to where the stock market bottom is, we'll look no further than here. I'm going to be the contrarian here, right? There's been so much negativity out there, and every YouTube channel out there gives you some crazy ass look, right? Yeah, that's the thumbnail. That's the stereotypical thumbnail. Is like, oh my God, everything's crashing. No, guys, look. Could we see the stock market go lower? 100%. But I'm here to tell you, and I'm going to be a little bit, like I said, contrarian, a little bit against the grain of what everything else you're seeing on YouTube and even in mainstream media right now. And I think that there are some positive signs that the stock market is actually moving up. And I'm looking right now at what Lee Cooperman just said on CNBC just yesterday, talking about how there are certain one significant sign of a stock market bottom is when you see stocks come in on earnings that aren't really all that great, aren't really something to get super excited about, and the stock ends up going green the very next day. The reaction off of earnings is actually good. And I think that there's something to this. I think that we're getting to a point in the stock market right now that things are so bad that they're actually starting to become good. Things are finally starting to get to a reasonable valuation. And I'm going to give you a couple examples of this. First off, though, let's go ahead and take a look at this chart on the S&P. So this is the SPY on the daily chart. And I wanted to zoom this out some because I wanted to show you guys where we are, where we're at on relative strength. March 2020, obviously we know where that was. The S&P got oversold all the way down to 21 on RSI. And then we look back again in January, of 2022, and it got down to 24 on relative strength. Right now it's sitting at 48, so starting to heat up a little bit because we're having a fantastic day as of this recording and actually starting to see a bit of a turnaround. The Dow Jones had an 8-week losing streak. That's the worst losing streak that we've seen in 99 years. I don't think the economy or the stock market is anywhere near the same type of conditions that we saw way back then. So I think that we are on the precipice of a potential bottom. You can see 380 was on the S&P was the low here for the year. That takes us back down to levels that we hadn't seen since March of 21. Obviously, it gave back a year's worth of gains. And I think that we could start to see this move up. We just started to see SPY right now as it's trading right now. Obviously, tomorrow could be a whole different ball game when you're seeing this video. But I think 410 is going to be a key spot. This is where it was at its intraday low in the end of February when Russia invaded Ukraine. And it ended up breaking below that, became a resistance yet again. So now we're going to try to test that one more time. And I think that we could get above that area and start to look at potentially 427 at that 50-day moving average, just from a technical standpoint. Now, the examples that I was making as far as, have we seen signs of the bottom? I was looking at Dick's Sporting Goods. Dick's Sporting Goods came in and guidance wasn't all that great. They came in and missed on earnings per share, and they ended up not doing good on guidance. And that the stock actually ended up selling off 15% in pre-market. Just to give you a visual here, here's what happened with Dick's Sporting Goods. Look at this. This is what happened the day that the morning they released their earnings. The stock tanked 15% all the way down to $56.99 in pre-market trading. And then as soon as the market opened up, it ripped, went all the way up 7% that day. Today, as I'm recording this, the stock is up another 8%. Again, maybe a sign that things are so bad that they're good. Just to give you an example of why I think this is one that's actually moving, or give you a reason as to why I also think this is moving, is because when earnings came out and it dropped 15%, the forward P on this was 4. It was 4 times next year's earnings. That's ridiculously cheap. And even with it trading at 6 times next year's earnings, it's still ridiculously cheap when you're seeing the S&P trading at around 18 times next year's earnings, far below the overall market. And so Dick's Sporting Goods is a prime example of this, is something that came in with not so great earnings and ended up shooting up. Another strong example of this is Nvidia. Nvidia came in and actually beat on earnings and beat on revenue as I reacted to those earnings, which, by the way, if you're not subscribed to the channel, make sure you consider doing that and hit that notification bell as I go live Monday through Thursday to react to all the earnings that come out throughout the year and throughout earnings season. It's a great time. It's a great community to be part of. If you guys aren't in the live streams, you should be. But we reacted to these earnings on Nvidia, and the stock immediately sold off. Got down as low as around 9 or 10% in after hours trading. Today, it's up 6% on lowered guidance. Now, you can make the argument that, yeah, this is, something that NVIDIA does, right? Maybe they're just being too conservative on guidance and what have you. 100% understood. But from a PE standpoint, it is expensive. This is trading at 31 times next year's earnings as of this recording. But it is, before these earnings, it got down to the lowest forward PE that it's ever seen. The lowest. So, considering that, how much that has come down as well, and considering the growth here on something like NVIDIA is absolutely extraordinary. Data center revenue grew 84% year over year, 84%. That is just mind-blowing number. And gaming also up another 30 some odd percent. I mean, the company is still growing extraordinarily well. So there's a lot to like here, obviously, and the stock has just come down considerably. Again, record lows as far as that's concerned on PE. So to me, I think that we're getting to a situation, a scenario where they're just so bad they're good. Dutch Bros, another good example of this. Let's go to the daily chart. When they reported earnings, they weren't great. They cited inflationary issues regarding their PE, and they're operating for a loss still. This to me, though, just screams what exactly the signs we're looking for a potential bottom. It's so bad it's good. Things aren't great right now, but they're going to be. The growth here on Dutch Bros is extraordinary, and so that's why the stock's continuing to get bought up. It's up 21% today. Unbelievable. Off of earnings that weren't great. And so I think that this is a potential sign that we have seen a bottom. May this, or could this be a how do I say this? Could this be a fake out? Could this be a bear market rally where we see this thing go up because the stocks have been selling off so much for 2 months straight, and now it's just time for a relief rally? Potentially. But I will say this, economically, we now have clarity from the Fed. They all but said 50-point rate hike in June, 50-point rate hike in July, and then we're going to pause, maybe see if we raise it another again towards the fall. That's the consensus right now, and I think that's a lot of what we're trading off of since those Fed meeting minutes just came out on Wednesday. The other thing I wanted to point out too was the huge drawdown on markets last week was from Walmart and Target. Reported terrible earnings, and in my opinion, this seems like poor execution or just not seeing what was going on as far as the consumer was concerned. We're seeing a huge shift in spending from non-discretionary, or from discretionary to non-discretionary items, and more money flowing into services and travel and whatnot. I mean, we already know about the airlines and how they've continued to upgrade their guidance for the year on revenue, and so demand there is very strong. People are still out there spending money. They're just spending money in different areas. So this is something that I think is very key. Target, Walmart, they missed on earnings badly, right? Worst days that they saw on after their earnings since 1987. They've since started to pop a little bit, but the sales that came in were higher than expected. So people still spent money at Target and Walmart. They just spent them in different areas than what the management was expecting. We fast forward to some of the other retailers that have reported this week: Macy's, Nordstrom, BJ's, a couple of other ones that came out and knocked it out of the park. And they see no signs of slowing down. So to me, I think with a strong consumer, some of these stocks overshooting, selling too much to the downside, there's potential that we could see a really nice rally, maybe even to the end of the year. Could this be the bottom? You know what? I'm going to go out on a limb and say yes. I think that this is the bottom for 2022. 2023 could be a whole different ball game. We could be talking about recession, but I want to save that conversation for later. I'll be the one that says, and I could be wrong, and I'll own it if I am, we've seen the bottom in the stock market. Let me know what you guys think in the comments below. Am I crazy? I'm waiting on the haters to tell me how nuts I am, that things are so bad that they can get worse. And I hear you. But I think that there's some really good things to be positive about. So let me know what you guys think in the comments below. Have yourself a great weekend, and I'll see you on Sunday.